Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to another episode of Canadian Investing in the US. This week, I just wanted to do an episode by myself for something different. It's one thing that's a really popular question that's been coming on my mind, and people have been asking me as well, is the state of the US real estate market. Yeah, this is a big question. And first of all, before I start this one, I want to definitely give a disclaimer that this is not advice. I'm just giving you some information and what some things that are going on my mind, and maybe it will trigger some things to go in your mind. If you have a totally different opinion, that is totally cool. But even still, I will not be offended if you email me or message me about it, because I am always open to hearing the other side of everything. So what I want to do in this episode is I want to cover a few things, right? First of all, is a recession looming? A little bit about stuff about inflation and some steps to try and keep this thing safer, right? Not necessarily in that order either. So do hang in there, because we're going to talk about a couple different angles to this. I want you to understand some things that, at least the way I'm looking at things right now. What if you believe that this recession is going to happen? What if you believe it's looming, it's right on the edge? What are some steps to make this safer? Okay, three things really. And we've heard this before from way back whenever I had Joe Fairless on the podcast, so probably early 20s, something like that. I'm not sure when I had him on, but it was one of the early episodes. But anyway, just to steal from that episode, three things you need. Cash flow. Obviously, we're all buying for cash flow. Mind you, I've talked to many people who are real estate investors, and they do actually have properties because they've done a refinance that don't cash flow. Make sure your property's cash flow. Secondly, Capital X fund, right? Make sure you have money if the roof goes, if something happens to your property. Make sure you have enough money to do this. I would also say protect yourself with insurance. Make sure you have insurance on all your properties, but for sure have a Capital X fund as well, right? So don't be running these things super tight. The third thing is longer loans. Make sure you go for the longer loans. When you have the option to do the 5-year, the 7-year, the 30-year term and amortization in the US, 30-30 loans, take it. If a recession does happen, what's going to happen is usually the banks are going to tighten up. So you may not qualify for the loan you currently qualify for, and they just may not be offering loans. When COVID started, the banks tightened up and they stopped offering loans just for like a month or two, but they pull back and they play it safe. So don't be in that fault. You don't want your loan renewing during that period. So just be safe and pick the longer loan option right now. Usually the prices are fairly similar anyway. So take the long loan option. Another things to keep this whole thing safer: shorter projects. Don't be doing these multiple year projects that are going to take tons of time and investment and everything else, because if the carpet gets pulled out from you during that period, that's going to be difficult, right? So that's the other thing, is a lot of times when you're doing flips and other things, you are at you have to respect this market, right? They go up, it goes down, but we've been in such a straight up for so long. It's fixed a lot of people's problems. How's that saying go? You're not going to figure out who's swimming naked until the tide comes out. Something like, I think I butchered it, but anyway, do shorter projects, make this thing a little safer, right? Buy right. This is so obvious. Stop buying those projects where you just assume that it's just going to appreciate like crazy just because it's in a good neighborhood. Buy your properties at a discount. Don't pay retail for these properties. Buy your properties right. Stop being lazy. And do a value add to these properties. A lot of people just buy these and expect the rents to go up forever. Buy stuff, add value. It doesn't matter if you're doing single family or multifamily, commercial, industrial, add value to your projects. Make sure you're doing things to force the rent up, to force the value up. And then you can refinance and take your money out. But anyway, you have nothing on the table then, right? Well, it's actually, I didn't even have that as a note, but that's another good idea, is refinance. Take all the money out, take all your cards off the table. But that actually leads to another question, right? So let's take a step back first. Should I be investing in real estate right now? Should I keep buying? I don't know, should you? And should you be investing in anything at all right now? Well, the other side of that question is to think about what is the alternative to investing in real estate or investing in anything. It's keeping your money in cash, right? So what happens if you move stuff to cash? Well, right now, you're guaranteeing yourself a loss by holding your money in cash. We're seeing an erosion of your money through inflation, right? So what am I talking about? Typically right now, depending on who you talk to and everything, inflation's at 8 to 12%, right? So as you're getting a lot of inflation, if you're holding your money in cash, your money is actually worth less. So you need to be investing in something, right? And when you're holding money in cash, you're losing buying power every year of 8 to 12%, annualized. So inflation punishes people who sit on their money. Interest rates. So think of the other side of this too, is there's interest rates playing into this right now. Are they creeping up right now? Yes, they are, right? But they do creep up and go down all the time. No one really knows where these are going. I have talked to some mortgage brokers because I'm always curious what their thoughts are. A few of them have said they believe it's going to go up a little bit farther and it should come back to last year's prices or something like that eventually. Interest rates are going up. But does this really play into this? I don't believe that the interest rates are going to do it. It might mean that some people don't have the same buying power when they go to buy your properties. So if you're, say, flipping or trying to sell a property, the buyers that are able to buy it, everyone's going to get pushed down a little in price point. So if you're buying really expensive houses, as interest rates go up, you might be in a difficult sort of situation. If you're like me and you're buying cheap houses, I don't see as much of an issue in that, because there's still lots of buyers in that price range. It might be actually pushing different people down into my group, which my group of buyers who may actually be better qualified to buy these houses. So inflation is prices rising. Rents are attached to prices rising. So your rents are going up as well. Think about that when you're thinking about this thing too. As this continues to go on, and the inflation keeps pushing these things up 8 to 12%, it is pushing your rent up as long as you're in a market that will allow you to fluctuate with the market, right? The other cool thing about this is doing multi-res or single family homes, right? Typically in those, leases last 1 year. So every year you can raise your rent wherever. If you're in certain states, you can raise it whenever you want, but typically you can raise it on lease renewals. So you have the ability to keep raising up and keeping up with this inflation. So that is a good thing in your advantage, right? So that is a good advantage to have right now. The other side of the coin is if you're in commercial or industrial, you may have locked your prices in based on 3 years or 5 years ago prices whenever you sign these leases, and the inflation has taken off, and you may have it built into your contract that you're only getting 2 or 3 or whatever percent raise every year. So you might not be getting as much as you could be if you're in that kind of real estate. Some of my final thoughts just to think about: debt on properties. Inflation erodes debt and it rewards debtors. And there is a housing shortage. There's not enough houses for the amount of people that are living there. You can draw your own conclusion. The best way to think about this is whether you believe it's going to happen or you don't believe it's going to happen, is to play it safe. Stick to the rules of real estate and buy it right. Add value, do shorter projects so you have shorter exposure to the market, do longer loans, have a capital X fund, and cash flow your properties. So I hope that was something that triggered some things. I didn't really want to say one way or another that I believe it or don't believe it, because I honestly don't know. I honestly don't know. And I think the smarter thing is to be safe. Thank you for tuning in, everyone. I know this was a short episode. I hope it triggered some things. And if you have questions, reach out. Thanks, everyone. When I started investing in the US, I did it by myself and had to go through the growing pains of doing that. GlenSutherland.com/coaching. A 12-week coaching program done 1 hour per week over Zoom from the comfort of your own home. Classes are kept to 5 people to be able to answer everyone's questions. Shortcut the process. Make fewer mistakes. Curriculum available at GlenSutherland.com/coaching.